Hello everyone, this is Joy. Welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and the market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, China's domestic steel prices showed a weak performance. The tighter supply provided some support for prices, but market demand remains soft due to the seasonal slowdown, while extreme weather, including high temperatures, typhoons, and the flooding, has further disrupted construction activity and steel consumption. Let's see more details. For starters, cost support from raw material is weakening. The first round of coke price cuts has been implemented. At the same time, overseas iron ore shipments increased compared with the previous period, while iron ore inventories at Chinese ports remained relatively high. In addition, hot metal production has declined. This means demand for raw material is becoming weaker, and the raw material prices are providing less support for steel production costs. At the moment, positive and negative factors are competing with each other. Supply reductions are supporting the market to some extent, but weak demand and the lower raw material costs are limiting any price recovery. As a result, steel prices fluctuated at relatively weak levels. Next, let's examine the supply and demand sides. This week, apparent demand went down by 133,000 tons, inventory went up by 116,000 tons, and production went up a bit. These figures show that demand is still going down. Meanwhile, some steel mills completed maintenance work and resumed production. Because of this, steel output started to increase again. After a short time of inventory reduction last week, total steel inventories returned to growth this week. In other words, supply is recovering while demand is continuing to weaken. This means the overall supply and demand balance are likely to improve in the coming weeks. To sum up, the fundamentals of China's steel market remain relatively weak. Demand is soft, inventories are rising, and the cost support is limited. At the same time, we are not seeing much upward momentum in the market right now. Therefore, in the short term, we expect the Chinese steel market to continue moving within a narrow range, with prices remaining generally weak and volatile. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye!